In this week's Investor Spotlight, we charge into the lithium space to discuss what's driving demand for the mineral, which stocks to look at to get exposed to it, and whether it's a good time to invest. What's driving lithium demand? In short, lithium is the mineral of the future. Lithium is a core component in batteries, which as the move towards green energy gathers pace, has seen an almost exponential increase in demand. There's scarcely a part of our modern lives that do not include lithium. Phones, laptops, watches, medical devices all rely on batteries that contain lithium. Most important of all as the green revolution takes shape is electric vehicles. As business and government make strides in decarbonising global energy sources, so too has the push towards electric vehicles and more complex batteries to power them. According to studies conducted by the US government, each electric vehicle contains 8 kilograms of lithium. Multiply that by the tens of millions of electric vehicles that will likely occupy the roads in the future, the scale of demand is astronomical. Here we look at 4 ASX listed stocks that you can invest in today to get exposure to lithium. Pilbara Minerals is synonymous for many with Australian lithium, with the company boasting the world's largest hard rock lithium operation. It's the largest lithium company on the ASX, with its $10.7 billion market capitalisation making it the sole large cap play on the sector. Pilbara is the only lithium company to generate consistent profits and has relatively extensive analyst coverage with a consensus buy rating and price target of $3.50. When looking at the charts, price action for Pilbara Minerals looks very constructive. The stock is in a long-term uptrend with a recent rally pushing it towards fresh record highs. A break of resistance at $3.80 would be a very bullish signal. Demand appears strong meanwhile around $2.50 and just below $2. Drops below the 20 and 50-week moving averages have proven strong buying opportunities in the past. Lake Resources explores and develops lithium brine projects, accumulations of saline groundwater that are enriched in dissolved lithium, with its operations based in Argentina, one of the world's largest sources of lithium. Lake Resources is in the middle of lithium companies as far as size, but has grown considerably in recent years, with a 5-year return above 2,000%. There's less analyst coverage of the company, however, of the 4 that do, all recommend a buy with a price target currently of $2.56. Although the long-term trend can be said to be to the upside, price momentum is pointing lower for Lake Resource shares. The weekly RSI is pointing to the downside, while price is trading below the 20 and 50-week moving averages. Buying opportunities have emerged around the 100-week moving average in the past, while support resistance is around 50 cents per share. Core Lithium is a lithium exploration company with the business positioning itself as one of Australia's next largest lithium producers. It mines spodumene lithium, an ore in which lithium is extracted, and its main facility is located near Darwin Port. Core Lithium is one of the ASX's fastest growing lithium plays, delivering a 5-year return of 3,130% to investors. The company is not yet profitable and has limited analyst coverage, with only 2 brokers covering the stock. Both have a buy rating, however, with a price target of $1.65. A look at the technical shows a primary uptrend for Core Lithium, however upside momentum has moderated with the weekly RSI trending lower. Price has carved out a double top with significant resistance just shy of $1.70 per share. Buying support has emerged in the past around the 20-week moving average and the 50-week moving average during deeper sell-offs. Technical support also appears around 90 cents. Siona Mining describes itself as an emerging lithium producer with operations in Quebec and Western Australia. Although it possesses a market cap of a mid-sized company at over $2 billion, the company sits at the more speculative end of the market when it comes to lithium plays on the ASX. Siona has delivered ample returns to shareholders, with the company increasing its value by more than 2,520% in the past 5 years. It's not yet profitable, however, even despite strong revenue growth, and has no analyst coverage presently. Siona shares are in a primary uptrend, but a failure to make new all-time highs points at slowing momentum for the stock. Price remains above all major moving averages. However, the weekly RSI is pointing lower, though is still above the 50 mark. Technical support could be around 20 cents, while a major level of support and resistance is around 10 cents. Getting exposure to lithium on the ASX is a play on a megatrend. As economies move to greener forms of energy and more advanced forms of energy storage, not to mention the shift to electric vehicles, the demand for lithium can only rise. Australia is arguably the best place to invest in lithium stocks, and there's a spread of companies that an investor can choose to add lithium to their portfolio or create a wider portfolio of lithium investments. In the short run, like any commodity-exposed sector, lithium stocks are proving to be somewhat cyclical and highly volatile due to the general immaturity of the market. Short-term plays on the lithium sector carry significant risk as a result, with a recent run-up in prices suggestive of unattractive entry points for a trade in the short term. The long-term trend is to the upside, however, and the decarbonisation thematic is a powerful one. As long as the move towards greener energy continues, the outlook for lithium producers is probably bright.